The news is flowing thick and fast on vaccines and virus treatments. Look at Johnson & Johnson. Our government, that's the American government, is going to buy 100 million doses of their vaccine, locking it in for us. That's J&J, up 1.3%. All right, Gregg Smith, Evolution VC Partners, is with us this morning, right before the market opens. Now, what's this about? You're recommending to the little guy, don't buy individual stocks, buy ETFs. Give me 30 seconds on that.
Yeah, good morning, Stuart. Look, it's so very hard picking stocks, even for the professionals, right? I mean, you probably have 90% of hedge funds that have a challenge outperforming the market. So when I speak to friends, I talk to many young founders that get money in their pockets and they want to invest for the long term. I tell them, please don't try and pick stocks. It's hard. Pick a basket of high quality ETFs. They're low expense ratios. Buy those and put those away. Equities are going to outperform most every other asset class over the long term. And if you're investing for a long-term horizon, that's really the best place to be.
Yeah, but some of us have done quite well buying Microsoft or Apple or Facebook or Google or Netflix, individual stocks.
Sure, but it's so hard. Look, I love buying ETFs. For my kids, I am generally buying the levered ETFs. These are ETFs that will go up or down 3 times with any change in the market. They sound very aggressive, and they are aggressive, but as long as you can stomach the declines, I think in the long term, it's really the best place to be.
Show me big tech, please, and bring back Gregg Smith. Why do you think that breaking up, say, an Amazon is good for shareholders?
Look, there's been a growing call by the Dems to evaluate breaking up big tech for anti-competitive practices. That could be a potential headwind for tech coming into the fall election. But I think if we back up and we take a look at the history of spinoffs and what's happened, one great case is look at IAC and Barry Diller and the amount of billions and billions of dollars in shareholder value that they've created by spinning off great companies like Expedia, HSN, TripAdvisor. I don't know if it would be necessarily a bad thing for big tech if they were forced to start spinning off some of their businesses. How much would Amazon Web Services be valued at if they were to announce that they were spinning that off? I bet Amazon stock would surge on such news.
Okay, tell me about Peloton. I've been following that thing. I remember when, at the beginning of the pandemic, it was down in the low 20s, as I recall, and now it's above $70 a share. That's a virus surge. Can they keep it up?
Look, Peloton's been a tremendous beneficiary of COVID here. It's the ultimate connected fitness company. I think this has all the makings of a cult stock. I think that they only have about 1.5 million members that they touch. They have an addressable market of 150 million members that are gym members in the international markets and the U.S. markets that they're in. So they have a huge greenfield opportunity in front of them. I think this is a great company that should be acquired by a Netflix. It's the ultimate content, community, and commerce company. And I expect great things to come from Peloton.
What a fascinating idea. Acquired by Netflix. Man, it's interesting. Thanks, Greg. We appreciate it.
Sure.
Sorry, got to run. You know how it is. Live TV. Check that big board. This is the high of the day.